Today I'll be breaking down 8 things you should avoid when choosing a bank. One of the most important financial decisions you can make is choosing where you'll keep your money. So watch this video through to the end because the last thing that I'll cover will make or break your banking experience. The first thing that you should avoid is a bank that is not FDIC insured. Especially this year with all of the bank crashes we've seen from Silicon Valley Bank, Signature Bank, and First Republic Bank, no one, and I mean absolutely no one, should be banking with an institution that is not FDIC insured. So if you don't know whether your current bank is FDIC insured, I highly suggest that you check today after you're done watching this video. The FDIC provides insurance over the money that you as a customer deposit into your bank account. In the event of a bank failure, your money is protected up to at least $250,000 per insured bank, and FDIC insurance covers all different types of deposits at an insured institution. For example, it covers your standard checking and savings account, money market account, certificate of deposit, cashier's checks, etc. We never know what could happen, so it's important to do what you can to protect yourself and your money ahead of time in the event of a bank failure. The next thing you should avoid is banks that have high fees. Some banks can be really sneaky with their fees, so it's important to read the fine print before you sign up for a bank account so that you are aware of all of the possible fees that could be applied to your account. Some banks charge monthly service fees, monthly maintenance fees, overdraft fees. There are a whole bunch of types of fees that could apply. But it is important to note that not all fees are completely avoidable. For example, one of them is overdraft fees, which you may be charged if you try and withdraw more money from your account than you have actually available. So the amount of the overdraft fee will vary from institution to institution, but I don't think that's a fee that's going to be going away. So when you're signing up for banks, just make sure that you choose a bank that has very low fees. This leads me to my next point, which is to avoid banks that have minimum balance requirements. A minimum balance requirement is the minimum amount of money that you are required to have in your bank account in order to either maintain an active status on that account, or sometimes it'll be a requirement in order to receive a certain interest rate. How exactly this looks differs from institution to institution, but minimum balance requirements will usually come in one of 3 forms: a minimum daily balance, an average minimum balance, which is your average monthly balance divided by the number of days during the statement period, or a minimum combined balance, which averages the amount of money that you have in various accounts, like your checking and savings account. Being required to maintain a minimum account balance ties up a small portion of your money, and it also requires you to be diligent in checking your account so that you never dip below that minimum and so that you're not negatively impacted by these fees. That's why it's always really important to read the fine print before you sign up for an account so that you're aware of what is going on. And also, it is not too difficult to find banks that have no minimum balance requirements at all, so make sure you do your research. The next thing that you should avoid is banks with low interest rates. And this is particularly applicable when it comes to savings accounts because most banks offer traditional savings accounts which have low interest rates. And that's why it's important for everybody to have a high yield savings account, and especially to keep your emergency fund and your sinking funds. A high yield savings account is a great place to store them. So if you don't know where to start looking for a bank that offers high yield savings accounts, I have a video on my channel where I cover the top 5 high yield savings accounts, and I talk about all of the important criteria that you should look for in banks that offer high yield savings accounts. So make sure you check that video out because I'm sure you'll probably find a bank that suits exactly what you need And as always, I will leave the link for that video in the description box below. If you're still watching this video right now, comment cake below so I know that you made it to this point. And while you're at it, be sure to like this video and subscribe to my channel for more personal finance content. The next thing that you should avoid is banks that have poor online banking features. It's 2023 and we shouldn't have to be dealing with banks that make it difficult for you to do online banking. If you like to use online bill pay features, or you want to transfer money to someone else or to a different account, you should be sure that you're picking an institution that can handle those transactions both swiftly and securely. And definitely I want to emphasize securely. I personally only use my bank's apps and websites for banking, and they work perfectly fine. So just make sure that the institution that you're considering using has good online banking features. The next thing that you should avoid is banks that do not offer all of the different account options that you are looking for. These days, many banks offer a whole variety of account options, but it's good to do your research beforehand and make sure that the accounts that you are looking for are offered at this particular bank, especially if you're looking for an all-inclusive one-stop shop kind of bank. The major account types that you'll want to keep an eye out for, in addition to your standard checking and savings accounts, are money market accounts, which are kind of like a hybrid between a checking and savings account that offer a higher interest rate than your standard checking account, and certificates of deposits, which are savings accounts that will hold your money for a specified period of time, and in exchange for them holding your money, you will receive a higher interest rate. And then thirdly are individual retirement accounts, or IRAs, which will help you to save up your money for retirement. The next thing to avoid, which can actually be pretty easy to forget about these days, is ATM fees. I know many of us like to operate as if we're in a completely cashless society, but we're not quite there yet. And it's a personal preference, but I like to always have some cash on hand at all times, just in case, anything happens. And at some point or another, we all need to use ATMs. So for that reason, it's a good idea to understand your bank's ATM fees and if there are ATM locations near you. Some banks have more ATMs in certain parts of the country than others, and it's a good idea to just be aware of this fact so that you aren't stuck paying high ATM fees if you're using an out-of-network ATM every single time that you need to withdraw cash. The next thing you should avoid, which can really make or break your banking experience, is banks with bad customer service. Customer service is really high up there on the list for me. It is super important, and it's the reason why, or one of the main reasons why, I've stayed with my current financial institution for over 20 years. They always respond to my messages quickly. Every time I have a conversation with them, it always goes well, and they are really easy to get a hold of. So for whatever financial institution that you are considering using, I would highly recommend that you read the reviews so you can find out problems that other people have had with that institution. But something I like to always keep in the back of my mind when I'm reading reviews is that people only write reviews if they A, have a really positive experience, or B, have a really negative experience. So just keep that in mind while you're reading through and weighing those reviews. So now you know what to avoid in banks, but having a bank account is one thing, and knowing how to actually manage your money in that bank account so that you don't go broke is a completely different thing. So click the video on the screen right now to hear about the one thing you should know that will ensure you will never go broke again.